Welcome everyone to our brand new video series where today we will be talking about the levels. And from these levels, I will be looking for my 3-day templates, 3-session templates, my session, timing window, etc. So just to start, I'm going to start off with our typical three levels. That's the previous day's high, the previous day's low, and the closing price. And from these three levels, I'm looking for my model. Now, this is just a quick debrief. Now, once again, that can be our pump and dump model. This is a false break reversal. It could be a pump and dump model, but it's breaking out, pulling back with the trend. And it can also be from the inside. Maybe we have a high, a low. They go to the high of the day or session and maybe giving a nail and bail. Mind you, we are inside, so your probabilities may decrease slightly because there's no other time frame trade is triggered. That's what I want to talk about with these levels. Whenever we break the previous day's high or low, we have 1 hour, 4 hour, daily, 8 hour time frame trade is triggered. So if this was a continuation, that would be because of the higher time frames driving this move. This is a dump and pump with the trend, breakout pullback. Now we can get a false break reversal. Maybe the trap and trade is up top, and that is the fuel we need to move to the other side. It's whatever traders could call this liquidity, other time frame traders. It's all the same. We need traders trapped on one side to move to the other side. Now, once again, I am looking for very specific templates, whether that be the trap and shifts, the pump coil dump with the trend, against the trend. This could even be the previous month's high, low, and close. And we have week 1, week 2, week 3, and the fourth week of the month, giving us the backside action after or maybe a first red day signal up top. As you can see, we have 1, 2, 3 higher closes before I move back down. But let's get to the nitty gritty. These levels, yes, obviously, these levels are where I'm looking for my model. Now, there are another set of levels that I am using, and that is the price, the major round numbers. Now, the same thing applies. Now, let me just make this clear. I'm not using the major round numbers to figure out what the market is doing. I'm using the major round numbers as confluence to build a trade thesis and a trade idea off of the price. Now, what we see here, I'm going to mark this up for you guys. Let me just widen this. This is our 100 pip box from the double zeros, 2 double zeros. This could also be a 1,000 pip box, just depending on how volatile that pair can be. Here is our quarter level, 25. Here is 50. And here is 75. Now, this is for every pump and dump and pump templates. Most pump and dumps, not all of them, but most of them are 3 levels of rise. That is for our reversal opportunity. If you are looking for a reversal, I'm looking for 3 levels. So it has to move from 0 to 75, maybe 75 to 50. It could even be in higher increments. So the basic increment is by quarters, 25, 25, 25. They fail and they reverse. Now, again, this could be multiple different models. This is just the most basic one. We can get one that even looks similar to this. Yes, that is quite the spike there. But the point of the matter is that they broke out and failed, putting in our peak formation. Now, I am truly meaning to make this as simple as possible. Zeros and 50s is my main focus. That is where peak formations can be put in place above or below zeros and 50s. Zeros and 50s is also where your best fill price is going to be if you're taking a trade. Now, technically, a great fill would be, for example, if you're selling above 50. Anything above 50, I'm selling. Anything below 50, I'm buying. Now, if the market puts in a peak formation above the double zeros, you see how we go 25 to 50 pips above zeros. That can be a false break zone. That can also be a range expansion zone. We'll get into that. But in this case, it's a false break zone. So anything above zeros, 50 pips, is a sell zone. And just one more time, anything above 50 is a sell zone. Anything 25 to 50 pips below zeros is a buy zone. Whoops. And anything before or under 50 from zero can also be a buy zone. Now, this is not exact. Now, each situation can differ just depending on the template for the week and the day. But this pump and dump model, this is just to keep it simple. If I was to sell this, I want to sell at zeros. If I can't get zeros, okay, I'll take 75 with a 25 pip stop or a quarter stop. If I can't get that, and if there's still space, maybe I get a pullback above 50 and I can get in at 50, back down to zeros. But point of the matter is I'm using the box to decipher whether I'm selling high or buying low. This could also be over 3 days. Day one, day two, day three. You see, we're up high in the box. So if we get a sell high signal, that's a signal for a potential sell high setup in the box. Now, I'm making this really clear because if I'm down low, the market is dumping down. We're down low, and maybe we do get a buy low signal. The market can break out, pull back, and go higher in the box because we're buying down low. We have a quarter's worth of trapped volume down low. But just to be simple, we're buying low. We're buying below 50. Same thing with the closing price. If you want a good price from closing price, it would only make sense to buy below the closing price. If you're looking for a good price to sell, you want to sell above or at closing price. But just to get to the nitty-gritty, this can be over 3 sessions. Once again, it can be over 3 days, 3 hours. We can get 3 levels of 25. We can get 3 levels of 50. So it can be 50, 50, and 50 for our pump and dump. Whenever they lock in the high, that's them locking in a price. So if I get in above 75, awesome. But if I can't get 75, I'm definitely getting in before 50. And as far as anyone struggling with entries, this is actually the secret that I'm keeping from you. It was a very complicated process understanding these numbers, but once I was able to simplify it with the model itself, I'm just simply looking to sell high. Quite literally, I'm selling above 50. Now we can also get three levels of 100. So 100, 100, 100 going up. And on that third level of 100, let's just pretend that this is the third level up, the third 100 pip box. They could fail and give us our reversal back down to the first level of rise, which that increment would be by 100. So I have a few examples I want to go over. But again, I'm not using these numbers to figure anything out. There will already be a signal, there will already be a setup in place or formation in place. And I'm using the numbers to decipher whether if this is a good sell high opportunity. If I am not high in price, maybe they're trapping traders for a squeeze back long. And I have an example of that. But let's start off with natural gas. As you can see, this is the double zero here. Here's 25, here's 50, and here's 75. We go three levels of rise. Day one, day two, day three, 3 days of breakouts. And on Thursday, the range reversal day, we get our pump and dump template. Now I'm gonna zoom in just a second for this, but I want you guys to see how on the way up in the new box, we're getting higher highs on the front side, right? And we're in a new box. Now, I stated that 25 to 50 pips above zeros can be a false break zone, but it can also be a range expansion zone. If we're on the front side and we have higher highs, they're going to climb higher from 0 to 25, from 25 to 50, from 50 to 75. And if they fail at 75, maybe we can get a move back down to 25 because now we have longs trapped up high in price in the box. Higher level longs are getting trapped. But I'm going to zoom in just a second. We can even break this down because I'm just going to measure this so you guys can see. This is 250 points. You can break this down even smaller and use on the day itself. Now remember, we can get three levels of 25, three levels of 50, or three levels of 100. Our first level of 100 is here. Now I have to advise you traders, I am not reading anything. I'm not trying to figure anything out. I'm coming to my timing window and the template is already there. But I'm using the major round numbers as confluence to let me know, am I actually selling high? Do they have trapped volume up high? And if they do, okay, maybe I have starter positions up here. But if they give me an entry near zeros, I'll take it. If I miss that and they pull back and I get a field chance above or at 50, I'll take it. If they give me a breakout and pull back, now mind you, they're pulling back the closing price. But look what major round number level we're at. We're at zeros. If I get in at zeros, I know I have a high possibility and probability of getting a 0 to 0 opportunity from 0 to 0. You can also get opportunities from 50 to 50. But this is very important because when it comes to compounding a trading account, I'm very specific on my profit targets. Because when you're growing a trading account, this is what traders, you know, later on come to understand is that you don't need the whole move to grow an account. If you're consistent with the right size, you'll be able to grow an account faster than you think. It will still take a series of trades, so it's not just one particular trade. It will take a series of trades, but you can compound a small account to a very big account. Um, and I don't want to excite you too much. You can do it very quickly, but I'm not saying that in the sense of one trade. I'm saying that in the sense of in a series of trades, the same trades, the same time, the same levels, behavior price. As you can see, this is our 10 a.m. 10 a.m. opens up, and what do? They lock in the high. Whenever they lock in the high, anywhere underneath that peak formation is a safe entry. Because when they lock in the high, guess what? They're not supposed to come back. And we are also up high in the box. So that's what gives me confidence to sell trades like this. And if I miss this, okay, once again, I can get in at 50s. Let's go to the next example here on the US 30. I'm just showing you guys the weekly template outlook. This is a 250 pip increment box here. So from the closing price, if you round this up, we're at 50. So we drop 25, 25, 25, three levels, 25. Okay, they go an extra quarter down to 50, and they trap the whole entire box. Mind you, they trap the whole entire box two quarters below zeros with the first green day signals and higher highs on the inside. Guess what they're going to do? But also on Wednesday, day three, when they trap traders below 50, this gives you a sell, excuse me, buy low opportunity. That's my second time doing that. A buy low, because look where we are in price. We're below 50. But there was continuation opportunities after the breakout. We're still buying low here at 75 because my thesis is at this very instant is that the price action below zeros, this whole zone below zeros is trapped volume, and they're going to return back to the original 100 pip box and climb higher and higher and higher, further trapping the volume down low, maybe even taking out the liquidity that is now sitting at the previous week's high, previous week's low triggered, previous week's closing price. That is what the three levels I'm looking for in a weekly outlook. That's what creates our box. And once again, they can break out pullback trend, break out fail in reverse, or stay in a trading range. Now, this is GU. This is from Monday to Thursday. But I just want to just show this, how they gave us sell high opportunities above 50. They gave buy low opportunities below 50 at 25. Now, traders are looking at this week and they may have interpreted Thursday as a first red day signal. If you did that, I mean, that's fine because we have a peak formation and we have a lower low, lows triggered. But the price, there's something off here. The price. If Wednesday is our resets, that's our high and low, right? And we're down low in the box and we have higher highs. This is a dumping pump. This is a squeeze. They're squeezing shorts down low in the box, putting in our peak formation and shifting from the closing price, further trapping shorts, and putting longs right back in the money. And that's that. That's the major round numbers for you. This is the hack that I'm using to enter the markets. Same thing on the US 30 for today. So this is a 250 pip increment box, but you can, on a smaller chart at least, go to our smaller 100 pip increment levels. And the higher high that was initiated in New York Open, which this is tradable, spiked up 200 points, 200 pips. I tell traders, if you're in a blow off move and you're in a trade and they give you 200, even 100, 200 pips in 5 minutes, 2 minutes, close the trade because there's a high chance that they can pull back into you because now you're the first mouse. They take out the first mouse, put in our W and initiate higher for a second continuation opportunity. Now, mind you, both of these are tradable. It's just the trader understanding which trade setup were they actually looking for. Are you looking for a blow off New York Open from the closing price? Or are you looking for a 10 a.m. continuation? But again, if you get a blow off move like this that's really fast and really spiky, as soon as they close, you need to be getting ready to close because they will take it all back. But let's look at the price here. They drop 100, 100, and 100. And in that third level of drop at 50, at zeros, at 50, we get entry opportunities. I cannot stress this enough. Traders are looking for the perfect entry. There is not one. But you can get in my opinion, a perfect fill. You can get filled at numbers. Buy low, sell high. Use the numbers. That is how I'm doing it. I may put in a starter at 50. And when they confirm above the double zeros at 25, so here's my first position. And then when they do this, bang, 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 now I'm full sized. I let it ride. I'm done when it hits the high of the day. And that could be 100, 200, 300% in one trade. Believe it or not, trust me, it can be. Gold is very volatile right now. It's literally moving 1,000 pips a day. But on Wednesday, we get a 3 session setup that goes 3 levels of rise to 75. And what do? They trap volume above 50. There's volume here, and they're trapped. They're buying high, but we're selling high because we're looking for this. We understand that sell high setups are sell high setups because of the price. We get fills above 50. We get fills at 50. At 50. Now on the way up, it's a dump and pump model. They bring it right back up. Okay, they lock in the peak formation, RW. Where? Where's the peak formation? Where is it? It's below zeros. That's where peak formations can be placed. They give us a higher high and pull back to what? 25. And where do they take off? From 25 back to the top of the box. This is a buy low setup. Buy low setup. We are on the front side. We're heavily on the front side of this market on gold. I got a question earlier, and the question was, hey, I thought we were on the back side. They broke structure. What happened here? And I'd like to tell you that we're on the front side. And how do I know this? Is if you're doing this, which yes, they gave a counter trend trade, but if you're doing this, you're not looking at these levels. Buy is triggered, buy is triggered, buy is triggered. No lower lows triggered. No daily lows whatsoever triggered. So breakout traders, the entire week are in the money. They're the ones driving the markets outside of the previous day, week, or month levels. Day, week, or month levels. We have other time frame traders above and below those levels. Now, if they reject the price, we can get a false break reversal. If they accept the price, we can get a trend trade. Now, mind you, the trend trade can also pull back as deep as the closing price. And I wouldn't even be surprised to see stuff like this because it very well can happen. They trap shorts, peak formation, higher highs on the inside, V bottom, closing price, 9:30, 10 a.m., etc. It's all the same. It's pump and dump and pump from these levels. We're selling high, we're buying low. Here's another opportunity here on how the numbers gets me in the trade. So let me just mark this up for you guys. This is the 10 a.m. open. And if we look here, we have a P formation high in Asia, a low in London, but they take out the Asia peak formation high. They take this out. Whenever they take out a high, all that means is that the peak formation is not put in yet. So when they put it in and lock it in, I'm looking for them to retest it for my trade. Remember, what are peak formations? They're M's, they're W's, M's and W's, head and shoulders, A tops, V bottoms. I want to see them lock that in or before the equity hour. Repeat, I want to see them lock in a high or a low in or before the equity hour. And then when I come to my timing window, all I got to do is look left. Is there a peak formation? Did they lock it in? Yes. Are we retesting it? Yes. Do I have a pin hammer engulfing below the MA? Yes. Am I coming off the major round numbers? Yes. So this is a possible 25, maybe, if you're lucky, 50 pip opportunity. No stress, no heat, no thinking, because the levels are where I am taking my trades. It is not about which candle is it? Which candle is it? Where do I get in? Do I wait for the flip? Do I wait for this? Do I wait for that? You could have gotten in anywhere. It doesn't matter. When you have a setup like this, it doesn't matter. Get in. Even if you're selling the top, you're getting a better price than 25. You may have been trying to get 50. You get as close as 50 as you can, but you don't necessarily get there. Maybe you have a starter position up here somewhere. And then when they confirm the trade, bang, 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 taking money off, holding, taking money off. These are scalable trade setups, and you'll be surprised with what you can do with 25 pips on the Euro USD with a broker that gives you 500 times leverage. But again, GU, just to look at our peak formations, to look at the price, double zeros, double zeros. This is the previous week's high. This is the previous week's low. We're getting higher highs. Buyers are being triggered. Buyers are being triggered. They trigger shorts one time. They coil on the inside, higher high on the inside. They trigger buyers again. So this is the third day of breakouts triggered to the upside. But when we trigger shorts, guess who's still in the money? Traders from the beginning of the week, from the close. They're still in the money. Shorts get triggered and they never see the light of day. Pay attention to how many times they're failing at a low or at a high, and then check the price. Th this is what makes it clear, the price. Oil, closing breakout signal, breakout pullback. Look where we're at. We're above 50. Look what they put in place above 75, the peak formation. Coming into the US session, low hanging fruit. Look where we're at. We're at double zeros. They placed a peak formation there and then they retested it. If you had stayed true to the price you were at and just understood, they can't pull back 25 pips. They're not supposed to. If you stay true to that, that's potentially 50 to 100 pips with no stress, no thinking, no stress, no thinking. So, major round numbers and our levels. And I'm speaking of the yesterday's high level, yesterday's low level, closing price level. So thank you all for getting to this part of the video. If you have major round numbers and levels, the next video I will be discussing the timings. And the timings is what really glues all of this stuff together. The templates, the levels, the weekly templates, the daily templates, the timings. This is what I'm focusing on. It's rinse and repeat every week, 2 times a week for the rest of your life. If you can do that, this is a winnable game. But if you're still trying to gamble and catch moves, you're trying to trade every day, you're trading different setups here and there, which it can work for certain people. Um, but I want to keep it simple, and I would highly suggest to keep it simple because, in my opinion, simple is better, and there's no stress behind it. You can live a healthy life, you can enjoy your free time. But again, not for this video to be too long. I will see you guys on the next video. We will be discussing the timings because again, the timings is what glues this all together. I will see you there. Blessings to you all.